Hello there and welcome to another episode of Ringgit Sense Plus. I'm your host, Azaria Tagaya. Now, on Ringgit Sense Plus, we've often encouraged our viewers to get adequate insurance coverage to protect yourself. So we were quite surprised to hear the story of Shahrum Ahmad. Shahrum had flown to London on December 12th to attend his daughter Nur Amalina's graduation, but he never got to do that. Unfortunately, just after arriving in London, Shahrum suffered a stroke. Now, he's now at a hospital in London. His family is burdened with a medical bill close to 70,000 British pounds, or almost 367,000 ringgit. This doesn't even include the cost that would be incurred in the case of his medical evacuation to bring him back home to Malaysia. Now, what is interesting in this case is that Shahrum had bought a travel insurance policy from AXA Afen General Insurance Berhad with a 300,000 ringgit cover before flying off. Shahrum's family has been trying to get the insurance company to pay for his medical bill and bring this husband and father home. Well, we decided to follow up on the story with AXA and the General Insurance Association of Malaysia, or PM, to get their comments. We spoke to Anthony Lee, chairman of PM, which has been following the case.
What we've done straight away is we notified the insurance company here in Malaysia, particularly got hold of the CEO to let him know that this case is very urgent and needs their urgent attention.
When we reached out to AXA, they gave us this statement stating that they've been in contact to offer further assistance to the family and will not comment on the details. News Straits Times correspondent in London, Zahara Othman, who has also been following the story, managed to speak to Nur Amalina on her father's condition.
He's stable in his own way. He opens his eyes sometimes, he moves his hands sometimes, but probably he's not fully awake. But the doctor informed me and the hospital informed me that he's fit to fly and he's okay for us to bring him back home.
The family has been in negotiations with AXA over the last few days. According to Nur Amalina, AXA's position has changed a few times. The family was initially told that they have to pay first for both the hospital bill and his medical evacuation and then claim it back from AXA. However, in the latest communication to the family, AXA has changed its decision again.
They say that both medical expenses and repatriation are not payable since they say this is a pre-existing, they classify it as a pre-existing illness, so they will not pay us for medical expenses as well as repatriation. But they do offer us Ringgit Malaysia 100,000, but we, for now, me and my family decided not to accept the offer due to some reason.
With the information we got from Nur Amalina, we decided to take a closer look at the travel insurance policy Shahrum bought and what the fine print said. We found a copy on AXA's website and read through it. We spotted a few things of note. Under Section 3, Medical and Other Expenses, it states that AXA will reimburse you as a direct result of bodily injury or illness. Notice the use of the word reimburse. That means you pay first and then submit your claims upon your return to Malaysia. Under that is Section 3A, which is about hospitalization. The policy will make advance payment to the hospital if you get into an accident. However, it does not mention anything about hospitalization for illness. The policy also defines pre-existing medical conditions as having received medical treatment, diagnosis, or advice from a doctor for a condition within a 6-month period before the start of the policy. It's a pretty broad definition, but it basically means if you already have a medical condition such as heart problems and you do get a heart attack overseas, the policy will not cover you. This isn't the first time someone has traveled overseas, gotten sick, and is saddled with a large medical bill. While not specifically commenting on Shahrum's case, Anthony Lee, the chairman of PM, says that pre-existing medical conditions are the most common reasons why a claim for a travel insurance policy is denied.
Yeah, pre-existing is definitely one, right? That's typically one where people are concerned. And there's usually an argument about is it a pre-existing condition or not. And sometimes it can be a bit gray, right? Because in typical medical conditions, it's not always black and white, whether the resultant ailment was as directly caused by the pre-existing condition or not. So this is where you need very good experts on hand to, assess the situation and make a determination. You should actually talk to your doctor and say, I'm going to go on this travel. Do you advise it, right? So, a typical example is, with low-cost carriers, everyone's very adventurous. And we typically get families taking their grandparents, going to China, walking up some beautiful mountain. The air is very thin. They've never done any exercise. Suddenly they're hiking up, 1,000 meters. That's going to be bad. You're going to be stressing yourself. So make sure you go on a holiday that is suitable for your medical condition, I would say.
We asked Lucas Oy, the Director of Insurance at RinggitPlus, is it common for travel insurance companies to ask travelers to pay for their medical bills first while overseas before making a claim from the insurance company?
Some travel insurance policies, they actually will pay for your medical expenses upfront. Terms like cashless medical claims or medical expenses. Do look out for that when you're buying your travel insurance policy. However, the majority of travel insurance policies is on a reimbursement basis that are sold in Malaysia. So do look out for that in the policy document or the terms and conditions in the product disclosure sheet.
Anthony adds, for the majority of the cases, travel insurance does work and has provided coverage for many who needed help while traveling. As for Shahrum Ahmad, Malaysia Airlines has also been in contact with the family to offer their assistance. We wish Shahrum a safe journey home and hopes he gets well soon. If you want to learn more about travel insurance before buying a policy, RinggitPlus has more articles explaining what it covers at their site. On our Facebook page, we've been receiving questions from viewers on how to better manage their money. We received quite a few requests for help from fresh graduates. So after the break, we're going to be doing a financial makeover for a fresh graduate. In the meantime, like our Facebook page and find us on YouTube. We have many more personal finance tips for you. See you in a bit. Back on Ringgit Cents Plus, still with me, Azaria Tagaya. Over the past few weeks, we've been receiving questions from viewers on our Facebook page about managing their money. Now, we've received quite a few questions from fresh graduates asking what are the best ways they can get a head start to be on track with their finances. So in our next story, we decided to do a makeover for our former intern, Nurul Ain Muhammad Yazid. We asked two senior licensed financial planners from the Financial Planning Association of Malaysia, what tips can they offer Ain? And perhaps all fresh graduates who are in the early stages of their careers can learn a thing or two from this feature. Let's watch. So for today's financial makeover, we have Ain. Ain is actually a former intern for us, and we recently just hired her as a freelance assistant producer for Ringgit Cents Plus. Now, Ain is someone who is a fresh graduate, has a non-fixed income, and already has a few debts to settle. So we want to know how our licensed financial planners can actually help Ain in her financial makeover. So we have Rafiq and Rajan to help her and give her some of the best tips. We asked Ain for a breakdown of her monthly expenses. She expects to make almost 3,000 ringgit a month. She has 2 loans that she has to repay, a car loan and PTPTN student loan repayment, which will start soon. Her total monthly expenses are 2,074 ringgit. She's also planning to get married and wants to set aside 500 ringgit every month, with an additional 100 ringgit savings for other long-term goals like buying a house. The first advice Rajan Devadasan, CEO of RD Wealth Creations, has for Ain is to start a sole proprietorship instead of a company if she's going to work freelance. The cost of starting a sole proprietorship is much lower and less of a hassle than starting a company. Rajan adds that Ain should also look into setting up an emergency fund with an extra buffer compared to people with fixed income.
We all should have emergency buffer funds. But for those of you who are conventionally employed and you get a regular salary at the end of every month, then I would say that you need only between 3 and 6 months expenses tucked away for Bumiputras, maybe in ASB. For the rest of us, maybe in current account, savings accounts, fixed deposit. I would strongly suggest that Ain from the very beginning starts contributing a little bit of money to EPF.
As for Rafiq Hidayat, the managing director of Wealth Vantage Advisory, he says people who work in a big company without a fixed income will have a problem of establishing their credit score, where later on in life, if they want to apply for a bank loan, they need to show that they have a steady income. One way around that is to make sure that the accounting for their sole proprietorship is accurate and up to date. Rafiq also suggests that Ain lists out a proper budget and sticks to it.
You don't have a fixed income, but you will have fixed expenses. So try to create a budget that focuses more on your needs, basically, your accommodation, your transportation, food, and maybe communication.
Rafiq also stressed the importance of having life and medical insurance for fresh graduates. Working on your own means you don't have medical coverage from a company. Thus, it's more important for you to go out and get a good hospitalization plan. As for life insurance, in case you die, you don't burden your family with the debts you owe.
If cost is an issue for you, you can always go for standalone medical cards, which is generally cheaper.
As for Ain's marriage plans, she plans to get married 3 years from now with a budget of 30,000 ringgit. She plans to share the wedding cost with her boyfriend equally, so she wants to save 500 ringgit a month. Both Rajan and Rafiq says Ain does not have to save 500 ringgit, as saving 250 ringgit a month will do. She should put the money in either a fixed deposit or bond funds, which will give steady returns.
So I would recommend that maybe she sets aside only 200 or 250 per month. She can save that in ASB, she can save that in a regular bank account and then build up to fixed deposits. Or because the wedding goal is only 3 years away, I believe she should not take any equity type risk. So she can still use unit trust, but I would probably recommend a bond fund of some sort.
As for her loans, Rafiq says Ain should start paying off her PTPTN loan as soon as possible and pay more so she's not burdened by the loan over time. As for her car loan, Rafiq says Ain should not have bought a car, as she's spending 1/4 of her income on the car loan, fuel and toll. Instead, she should take public transportation. Rajan adds, as she has already bought one, she should keep it for as long as it is roadworthy before buying a new one.
I think what you may find particularly helpful is if you go out and you buy yourself a little notebook, something like this, and for the next 3 months, do the best that you can to actually track all of your expenses, everything that you spend, little or large, whether it's cash or credit cards or whatever else, and use that and match it against your budget.
Rafiq's final advice for Ain is to lower the 400 ringgit amount she plans to give to her parents monthly.
Taking into the fact that you're still living with them, I would actually maybe suggest that why don't you take on one of the monthly expenses of the household. Example, maybe either the electricity bill or the internet bill. it would still be about 150 to about 250 a month. So, which is slightly lower than what you are thinking of doing, but at the same time, it still fulfills your requirement of giving back to your parents.
In summary, fresh graduates should find ways to reduce their expenses and don't get into any debts like car loans until they can truly afford it. Emphasize in investing money instead of spending money. Is managing money as a single person living in the Klang Valley any different than if you're married and raising a family? Next up, we take a look at a few more financial profiles handed in by our viewers and sit down with Han Liu from RinggitPlus to talk over the details on what kind of financial makeover plan he would suggest. That's next. Don't go away. Back on Ringgit Sense Plus with me, Azaria Tagaya. Before the break, we took on the case of a fresh graduate, Ain, who was in need of some financial education. This time around, we take a look at two more profiles, two very different types of people with one thing in common. They could use some savvy financial advice to get their spending and savings on the right track. We asked Han Liu from RinggitPlus to look at these profiles to find out what course of action he would suggest. Let's watch. The first profile we looked at was of Alex, 28, a single guy working and renting a place in the Klang Valley. He doesn't have a credit card. He's currently paying off his PTPTN loan. His long-term goal is to buy a home. For the short term, Alex says as a single person who often goes on dates, he finds this habit is slowly burning a hole in his pocket.
In a money makeover, you think about it that way, which is what is the most painless way that Alex can make savings without really changing how he does things. So for example, if he doesn't have a credit card right now, but he spends money, what does he spend on? Probably buying groceries, because he might cook at home, probably going out sometimes and eating out, probably spending on petrol for his car, if he has a car loan, right? Choosing the right credit card can really allow him, someone like Alex, to do exactly what he wants to do in his life, spend on petrol, groceries, and dining, and get cashback, rewards points, whatever you call it, more so than what he would do if he was just saying, here's some cash, right? Even if it's 3 to 5% on 1,000 ringgit spend a month, across all these things, 3 to 5% is an extra 30 to 50 ringgit in his pocket without changing anything. So that's the first thing to do. Look at the things that are quite light and easy, don't really have to change much about your lifestyle. You should do it anyway, and you make those savings 30 to 50 ringgit, that's 500 ringgit or more in your pocket every year.
The next thing he should be doing is to think about whether or not he's willing to make a few small sacrifices in order to achieve his ultimate financial goals.
Does going out less save you money? Probably. Does cooking at home and having home dates versus going out dates? I won't say whether it's more romantic or not, but on the money front, you save more money. So those are kind of lifestyle changes where he has to make consider making as part of his makeover process. But again, painless savings first before the painful stuff.
Alex also has an additional question. He finds that when going out on dates, he's usually the one who always ends up paying. So he wants to know if it's appropriate to ask his date to share the cost.
A simple trick or simple example I generally look at is to establish the financial discipline within your relationship. So one key trick which I would encourage everyone to do is go, okay, how about this? Dinners on me, lunches on you.
Han offers this tip as a more practical alternative that can help to cut the cost of going out in half. Here's a breakdown of Alex's monthly spending. His take-home pay is 2,700 ringgit a month, rent is 500 ringgit. He's paying off a 430 ringgit per month car loan, and his PTPTN loan repayment costs 350 ringgit monthly. Car expenses, including petrol, toll and maintenance, comes up to 500 ringgit. He spends about 800 ringgit per month on food and entertainment, and that includes spending on dates. With miscellaneous spending around 100 ringgit, Alex finds that he's spending a total of 2,680 ringgit out of 2,700 ringgit that he makes. He does not save or invest and doesn't have insurance.
I'd advise him exactly to do what we're discussing all this time about the financial makeover, which is, sounds like he's only saving a very little bit, right? 20, 30 ringgit a month, right? Just by making adjustments to how he does things, not what he does, which is, so for example, if it's, I've got a car, I can't change that fact, can I get a better car loan? So on a 50,000 ringgit car, the difference of 1% is 500 ringgit a year, right? And that's already triple what he's saving right now. Still has the car, still drives to the same places, still goes out with his friends, but just by even before he thinks about getting the car loan, or even he has one, it's about to end, he's about to get a new one, the simple fact of saving that 1% on a car loan, of which there are savings to be made by comparing across the market for car loans, that's an example of a painless saving that he can make straight into his pocket for him to then start building his wealth, start increasing his income, and then think about insurance.
On the RinggitPlus website, users like Alex can seek and compare car loan options to see which can best meet his needs. Now, let's take a look at another profile, this time that of a married couple. Luke and Sarah have 2 young children. They have a take-home salary of 7,500 ringgit and have bought a house in the Klang Valley. They have a family car and their kids go to daycare. They typically spend money on food and their children, but they've been holding off on medical insurance and life insurance. They have 2 clear long-term goals: to save for their children's education for when they will need to go to college in about 15 more years. Also, retirement savings for themselves.
There are certain tips or tricks you can do to reduce that spending. Here's an example, you use a specific credit card that can be used for school expenses and count towards your cashback. Not all do. It's about making sure you make the right choices, right? 1, 2, 3% for a 10,000 ringgit a year spend is several hundred ringgit, which can be used for things like increasing the medical coverage that they want, or starting to save for the future. So if it's 500 ringgit a year, 15 years, that's several thousand ringgit, and if you include compounding interest over time on investments, that's a kid's education fund right there.
They have a home loan for which they're paying about 1,850 ringgit a month. We ask Han his advice to them on how to reduce the cost of the home loan.
I mean, without knowing too much about where they are in the repayment cycle, something like a 1,800 ringgit loan, it's usually about 400,000 ringgit, the loan size. Say for a 25, 30-year loan. I'm just using ballpark figures here. But if you think about it, the variability in the interest rates between loans across banks is higher than most people expect, right? And even, a 0.5% difference is huge, right? 0.5% of a 400,000 ringgit loan every single year is 2,000 ringgit, right? And the cost of refinancing now for a home loan has gone down so much, and the rules around home loan refinancing have been loosened so much that switching is easier, right? And switching is less expensive. So if you can save that 2,000 a year without doing anything different, just by changing a provider to one that can offer you a better rate, maybe because you had not done the research beforehand, that's 2,000 a year.
Well, that's it for today's show. Did you think the tips we shared in our makeover story can be applied to you? Let us know what you think. As usual, the stories that you watched today are also available on our Facebook page, and you can also search for Ringgit Sense Plus on YouTube. Leave your comments on our Facebook because we always love hearing from our viewers. I'm Azara Tagaya signing off. We'll see you again next time. Until then, invest and save wisely.